time for stock picks. Today we look at private education player ADvTECH, fishing and food group Oceana, transport and logistics with Grindrod. Joining us to break down these counters is Anthony Clark from Small Talk Daily Research. Anthony, thanks so much for your time this afternoon. Let's start off with Grindrod. In its last update, the group had warned of, pressure from lower commodity prices and lower profits from Maputo. Take me through why this is one of your picks this afternoon.
Yeah, good afternoon. It's nice to be here from chilly Cape Town. The three picks that we're discussing today, which is ADvTECH, as you said, Grindrod and Oceana, all have something in common. All are very good quality mid-cap stocks. And over the last couple of months have been quite heavily sold off, mainly by the PIC, who have been rebalancing their portfolios. And we've seen very, very aggressive selling across a basket of mid-cap stocks on the JSE. And as such, certain counters like Oceana and Grindrod have been unduly hit, despite the fact the underlying prospects of the companies are fair. They're not brilliant, but they're fair. So that's the main tenet as to why we're discussing these three stocks today. So one large shareholder deciding to rebalance their portfolios and in many cases completely slammed the stocks. In Grindrod's case, year to date, the stock is down about 4%. And in the last 12 months, it's down 26%. And as you correctly mentioned in the opening preamble, the underlying commodity market, which Grindrod plays in, which is movement of its commodities on the railway network, on the trucks, to Maputo port, have been disrupted. A combination of political violence in Mozambique because of the election last year, the ongoing problems with Transnet, which I think all the listeners are well aware of, and more importantly, the fact that commodities, particularly coal and certain other commodities, have fallen quite sharply in price, like on like, which means the underlying volume throughput, whilst it's been quite high, the value has come down. And you start putting all of that together, and it led to weaker earnings in Grindrod. However, they have quality assets. They've got a fantastic asset in the port of Maputo in Mozambique and the newly acquired Motola container port. They've got the third-party rail PPPs operating in this country under Minister Barbara Creasy. So they're very, very well placed going forward for the underlying uplift in private sector logistics in this country. But the share price currently, due to weakness from one large seller, is under the whip.
Okay, so yes, they are poised for growth and the fundamentals seem good. Are you concerned perhaps by the leadership change that's coming through with Xolani Mbambo stepping down by the end of the year?
Yeah, I must say, Xolani's departure came as a bit of a surprise to us analysts who cover Grindrod. I've covered the stock now probably for 25, 26 years. And his expertise in logistics, particularly in trains, will be sorely missed. But to take a position as the Chief Financial Officer of Kumba and the potential that they have going forward to use their own logistics to move iron ore to port, it's understandable that a gentleman of his caliber is moving up in the world. But to date, we have not had any indication as to who his successor would be. There are whisperings potentially regarding some internal candidates, but given his departure is only happening at the end of this calendar year, the market is waiting to find out who will step into his large shoes, because whoever he or she is, it'll be very key to the direction of Grindrod, given the investment they need to make in the third-party rail to benefit from the government's semi-privatization of those rail assets.
All right, let's move over to Oceana. The Lucky Star owner, of course, being hit by factors it cannot control, and that being, the decline in fish oil prices. You mentioned we've been seeing a heavy sell-off by an institutional investor, and that's weighing on the share price. And I also looked at that share price down over 20% year to date. Let's get your analysis on that counter.
Yeah, Oceana is a really interesting counter. It was trading at about 70 Rand only a matter of months ago. But this is a classic case of when a large dominant player is out of a global marketplace and prices rise. As a bit of a basic context, Peru is the world's single largest producer of fish meal and fish oil that goes into aquaculture and a variety of other products like pet food. When Peru was out of the marketplace, 20% of the global supply basically vanished. And supply and demand meant that the prices of fish oil and fish meal rose extremely sharply in 2023 and 2024, which meant that Oceana's US affiliate, Daybrook, made not just super profits, they made record blockbuster bumper profits. At one point, 1.2 billion rand from a company whose historic level of profits in that region is around 300 to 400 million rand. As Peru came back into the market in the last 12 months and supplies returned in fish meal and fish oil, understandably prices have fallen, and they've fallen very, very sharply, which means that the growth engine inside Oceana, which has been its US affiliate Daybrook, is now normalizing. So despite the fact that Lucky Star canned foods is doing extremely well, and the domestic wild catch business is picking up after years of lackluster fishing conditions, the market is seeing substantially weaker profits from Daybrook weighing on the share price, and the price earnings ratio is trading at around an 8, with the market expectation seeing that the earnings in the next 12 months will fall quite sharply. But again, one can never take into account fishing. It's a factor of Mother Nature.
Yeah.
It's good one year, it's bad the next. At some point, fishing in Peru will normalize, and prices once again will start to run. But as it stands right now, Oceana at 53 rand 44 cents is feeling the brunt of the market expectations of a substantial decline in earnings for the next 12 months because of the US situation. So it's an interesting play, but not quite yet.
And interesting to see when if things seem good locally, things are going bad internationally. And when I was doing some reading, there was, concerns about Daybrook and whether it can deliver long-term value.
Yeah, this is an interesting one. Many years ago, as we all know, South African companies diversified internationally to mitigate risk of operating in the South African market and to get rand-based or dollar-based earnings. Oceana bought a company in the US called Daybrook, and for many years it delivered very good profits, between 300 and 400 million rand. And that kept the market happy. But since the super profits of a couple of years ago have waned from 1.2 billion rand, round numbers, down to about 400 to 500 million rand, the share price has fallen by about 2.5 billion rand in market value. And I have read there have been reports of the company to consider selling Daybrook. But why would you sell an asset at the lowest point of the cycle, given it has consistently made between 300 and 400 million rand a year? So yes, back in the day it looked like a great asset, but investors' fickleness regarding international assets is quite well known. And I think as it stands right now, there's no love lost between the market and Daybrook inside Oceana, but the cycle will turn. The question is when. And I don't think that's going to happen for at least another 12 to 18 months. And that means the Oceana share price, despite the fact that Lucky Star and Wild Catch is doing relatively well, means it probably will weigh on the share price. But at some point, it'll start to look extremely cheap. And I think that point is getting fairly near.
All right, and just quickly before we wrap up, let's get into your third pick, that being ADvTECH. I think this one, outside of the two you've picked, has the most positive upside momentum, operating in a very defensive space where we are seeing demand for private education increasing. Just walk me through your analysis there.
Yeah, a great business. The private education sector has just been through their annual general meeting sector, which means that all three companies, Avitech, Kuro and Stadio, gave their AGM feedbacks to analysts and shareholders. I participated in all three AGMs, and a note to this regard went out last week. And Avitech came out with an extremely bullish update regarding its prospects, not just in this country, but mainly into Africa. It's got operations in Botswana, in Kenya, and it's now opening up in Ghana and in Ethiopia. And the growth of private education in Africa is extremely strong and is dollar-based revenue with much higher margins than we see in the slightly more constrained South African marketplace. Avitech has a very, very strong balance sheet. It has a long-term track record of performing extremely well in private education in this country, not just in the tertiary space. It owns Rosebank College, amongst others, but also the private schooling space. And management came out saying they expect another very solid year of domestic growth, but much better growth in Africa. And I think the share price once again had been capped. Value Capital Partners, who was one of their largest shareholders, owning just shy of 10%. They sold off about 3.5% of the company in the last few months. That has weighed on the share price. It's been trading at around 32 rand a share. And if, as I believe, the earnings coming out for the next 6 months and the next 12 months, backed up by a solid AGM feedback, actually starts being seen by the marketplace, I think the share price will start to play catch-up from a period of going sideways for 6 months. So ADvTECH, to me, has got extremely good prospects in the private education space.
All right, let's leave it there. Anthony, thanks so much for your time and taking us through those 3 counters. Now, that was Anthony Clark from Small Talk Daily Research.